Hi, Warriors. Dale Pinkert here at TradeGATEHub. We are sponsored by TradeView Markets. So when I left you last week, and it was on Wednesday, talked about the potential of the dollar making a new low with the yen putting in its second higher low. And now we're cracking this 134 level. So what I see happening here in the yen is pretty important. I think you could be long against 132. And here's what I'm talking about. Higher low, higher low. Here's Dixie. Lower low, lower low, a throw over. Now it's trying to turn good again, closes back over 101.7. I believe it's 60 for a 2-week reversal. And the trend line come in at the same place. What bothers me about the dollar is momentum readings down here. That could we get one more flush for an emotional washout under the par number that still is possible. I'm open to every possibility. I'd rather wait for the breakout now than just get long early this morning, not knowing if we're going to get follow through or not. It's being led by weakness in euro, and EG is definitely putting in some negative candles at major resistance, as you could see at 86. But you know what? You don't have to be right every market. Been right about the yen. I contend that the yen, now that we have a 134 breakout, and we could get some news where we could pull back to 33. But the line in the sand has now moved up from 131 to 132, and now it looks like we're getting some type of breakout here. And I think some people will be surprised with what my targets are over the next few months. So our next big obstacle is going to be up here around 138. Should this trend continue and 132 hold, and then we start breaking out over 137, 138, this high right here, you're talking about over 140 handle. So possible 144 handle. And it looks to me like yields are reconnecting. I look at the 10-year yield right now. It's acting pretty good. Shorter term, we've come out of some resistance. Almost looks like a little breakout that we're getting here over the 350 level. Really need to clear 360. So this is going to be the key. If you clear 360, you can make a case for 390. Now it's not the all-time highs, but I don't think the market is really set up to handle it. Maybe another test up here towards it would measure 380, 390. So we'll see. It's hard, although the yen has not really completely reconnected with gold. I still think it will. Gold line in the sand for bulls if you didn't take the 3 drive, which is what it morphed into. When I was last on, it looked like this was going to be the high, but it was only 2. We had one more push up, and you're getting a lot of risk off here. So 1920 I think is viable, and it better hold 1920. In fact, I do believe if my yen targets are attained, that you'll be able to buy gold under 1900. Maybe 1860, maybe even as deep as 1800. Most people don't believe it, but they think we're not going to have the type of correction we had here. But this is really going to be the key for it. Looks like the gold-silver ratio still can't turn. We have so many divergences, but it hasn't turned. I'm really looking for Thursday. My ideal scenario would be for the dollar to sell off one more time and get that emotional capitulation move under par. You know how people look at big round numbers? Well, a big round number in the dollar would be par, right? Just like 2000 is in gold, just like $100 crude is. Many examples, beans in the teens, emotional big round numbers, $20 silver. They're almost like magnets. So it is possible, because of this RSI reading that we had down here, that there could be one more setup for a retest, and take out these recent lows. These lows, this low was 33, by maybe 50, 100. At the most, I think 99 will hold. So looking for maybe one more emotional sell-off into the eclipse on Thursday, one Friday, early next week, and then a turn in the dollar and the wrecking ball in the dollar. We start to get that more vicious bear market rally in the dollar that participates with what the U.S. dollar yen has led the game off, starting all the way back at right around the equinox. So I'm talking like a little WD Gann stuff here. S&Ps, they still need to close over 4,200. I'm hearing more and more talk about 43. The line in the sand for the S&Ps is this 4075 level. A lot of confluence. You have the uptrend line going back to the January lows at 3,800, and this support line all coming in around the same level. So for bulls to maintain control, and they're doing it because hedge funds have record shorts on, we could pull back, and then closing over 42 is going to give some other fib targets above 4,300. So 42.95 still the big test. We'll see what happens if the market could handle yields going from where they are now, and they were down to 330, currently 10-year 356. I don't know how the market's going to react to 390 on the 10-year if that technical formation is correct. Something I've been talking about on and off, I just want to give you an update on, and it's the wheat. And the wheat did not give us a third drive, so it's in no man's land here again. If it did, boy, there'd be such glaring divergence on this daily now after the update we had Friday that there's no way, if wheat pulled back and gave us a three drive, that the divergence would not be glaring. The weekly setup is compelling, and the key, of course, is getting back over this bottom at 705. That's your signal. And we are getting the correction also in Bitcoin. So I thought that we would have a correction in most asset classes. And I was talking about 30,500 in Bitcoin. It went higher than that, but not by a lot. Close enough for government work type of thing. So let me just find Bitcoin. Where are you? Anyway, thanks for, oh, here we go. So down almost $1,000 now. Your weekly off numbers way down here. I don't know if we'll get it. It's 28,340, but that would be a false breakout, which is what I thought could happen if you just adjust this line to some type of, instead of it being a triangle line, just draw it straight across here against the prior two highs. You're on the verge of a breakout failure in Bitcoin. And I do think that Bitcoin's going to get hit pretty hard. I think at least 18,000 and perhaps even a retest of the base, but we'll see. Something else manifesting. I think I could just leave it with that. Mike will be on in an hour and a half with you guys. I have a great guest to be discussing the dollar with this week, Julian Brigden at MI5 Partners out of Aspen. He just wrote a column for, I believe, Barron's Online, sure if it was Barron's, about the de-dollarization going on in the world. Julian's a very great analyst on a macro level. So be sure to be here Thursday. Remember, always know where you're wrong before you enter the trade and know what you're looking for. You can't answer those questions, you're not ready to trade. And prepare yourself so you're not just doing it on the fly. So we're getting, pretty nice moves in the dollar. Dollar may prove itself, but I'm looking more towards later in the week, especially if we're at new lows, to go in there and buy some type of washout panic in the dollar should that manifest. Good hunting, everyone. Good luck. Remember, don't just count your pips, count your blessings. Drop in and say hello to us at TradeGATEHub.com. Adios.